How's it, guys? Welcome back to FX Rhapsody. Today we're doing analysis on two currency pairs. It's going to be the Euro USD dollar and also the British pound USD dollar. Before we hit the charts, just go visit my website, the bottom left corner over here, where you will find some nice video categories, some nice reading material about trading. And then also for those of you that's getting started in trading, in the video categories, there's a nice getting started. There's some strategies and, well, anything you can think about of trading and will help you in your trading career. Just go visit my website. Also, under the resource tab, there's COT reports to be downloaded. I've updated them, so you can download that for free. Go visit my preferred brokers. These guys are absolutely brilliant when it comes to having a reliable broker behind your side. And all of us, all our retail traders, we need a reliable broker. So go check these guys out. Okay, so let us hit the charts. We're going to be starting off with the Euro USD dollar. We're just going to be looking at the 4-hour time frame and then move over to the 1-hour time frame, and then see what happened in the market, and then just to see what might happen in this coming week. So on the 4-hour time frame, what we saw is this was the end of last week, and we saw price just slightly moving up again. So for those of you that did not catch that, you have a little bit of a swing high over here, okay, as you can see. Then we always looking out for any type of swing lows to be formed in the market, because we can see that the euro is in a downtrend over here. I'm just going to zoom out a little bit. I'm just going to highlight a couple of areas in the market. Okay, I'm just going to highlight this area, this low that was formed on this area. Okay, that's a low that was formed. It's just highlighted in a different color. So as we can see, liquidity lying below these areas in the market, and what we know about price action is price action hunts these areas of liquidity, taking them out. And so yeah, these are nice little areas. The first one that was taken out was obviously this one over here, and as we can see, that happened last week. So now these are going to be areas in the market that we're going to be targeting. Okay, these are targeting areas. So price, don't want too many lines in my chart. Okay, so what I'm going to do is just leave that in. You can make it a little bit, let's just do that, it's a bit too thick. There we go, and that and that. Okay, so we always want price action, especially when it comes to going from an uptrend. I'm just going to zoom out a little bit. If it goes from an uptrend and then momentum shifts and it goes from an uptrend to a downtrend, or vice versa, we're always going to look at, to the left of the chart, just to see where all these liquidity areas is, and then just, these are target areas the price might be hunting. So what we're going to see is we want to take a swing low, a swing high to the swing low, and we're going to be targeting this area in the market. Okay, that's the area that we want price to go towards, and that's the area that you place your sell trade, seeing that we shifted from a upwards movement to a downwards movement. And as we can see over here, price nicely moved into that area, and that's where you place your sell entry in the market. And then we see price from that area moving down. That's your target. I mean, it's hitting that, it's taking out that liquidity. So I'm just going to take that out and take this one out. That's not important anymore. Liquidity was taken out. So with that movement, okay, over there, and if you missed that sell opportunity, we wait for another sell opportunity to arrive. So we have our swing high over here, and then what we want to do is take our swing Fibonacci out from our swing high to our swing low. That's what we're waiting for. We're waiting for this area in the market, as you can see. Okay, that area to be taken or to move into, and then price just almost touching that area, but we can see it on the low time frames. We will see a nice little tap in that market, and then price just moving downwards again, taking out another liquidity area in the market, as we can see over here, and then price again just forming another swing high to swing low, and that's what we're seeing over here. Price moving into the 62% area, and that's basically where price ended this week. Okay, so yes, we can be in another sell opportunity. We want to see price moving downwards. Okay, so let's move on to the 1 hour time frame. Okay, on 1 hour time frame, guys, we ended off last week with the price just hitting this area over here. On the 4 hour time frame, that was our low. So price is consolidating there. So we wanted to see price going into a direction. Now, what direction? I mean, obviously on the high time frame, we saw the movement upwards. So with that said, on the higher time frame, we were waiting for that sell opportunity to arise basically up here, okay, for that retracement. So how can you take that buy upwards? Because like I said, a lot of times you don't have to just wait for that price to move upwards. You can also take that buy opportunity that goes up. So as we can see, price just breaking this area in the market. It breaks that area that we highlighted. It formed a nice little candle downwards. And that's, we see price going up. So this movement over here, this candle, okay, broke back. And that's going to be our low in the market. That's going to be our swing low. So now we're waiting for price to make a little bit of a swing high. And that is formed by this candle over here. As we can see, price moving downwards. So this is the hour candle, guys. This is the hour time frame. And as we can see, just that push in the candle, or that push downwards, moves into our zone of interest. And that's going to be our buy opportunity. On a higher time frame, we're waiting price to retrace back, if you can remember now. So we know price is going backwards or going up. We have got a little bit of a gap, fairly gap, or imbalance in the market. Yes, it was formed, but there's still a little bit of a gap. So we want price to hit that area. So this area from here to there, that's going to be a little buy upwards. And that area will also fall part of our, or fall nicely into the retracement on the 4 hour time frame to that 62% area in the market. So why can we not just buy upwards? Why can we not just take that 20, or let's call it 3 pip, move upwards, and then sell from there? Okay, that is what I want you guys to realize. You need to be able to see these moves happen. And as we can see, price moving and going and going and going, and eventually hitting that area in the market. You see that? And that is, if you look back in the 4 hour time frame, that is our retracement to the 62%, where we're looking then for sell opportunities. So that is where you sell in the market. So guys, you need to be looking at not only one time frame. I've made videos about this. You need to be able to look at multiple time frames just to see the bigger picture, and then you will see the moves happening in the market. So now on a higher time frame, we can see that's sell opportunity. You can sell there, obviously on your lower time frame, on your 5 minutes, just taking that entries. But let's, for instance, say you were just trading the 1 hour and 4 hour time frame. So you're in the sell opportunity, and excuse me, then you missed that sell opportunity. But again, on the 4 hour time frame, you know what's happening. So you see that swing high in the market, and on a, it's going to be over here. So we're waiting for any type of swing low. So let's just wait and see if there's any swing lows that forms, and that is it. So you have a swing high in the market. Why am I saying this is the swing high in the market? Why am I putting my Fibonacci from there to there? Because we had a break of structure over here. I'm just going to do that. Okay. That candle, that pushing candle down there, was breaking that structure in the market. I'm just going to make it black. So that is why I'm putting that swing high over there and not above here. So that's my swing high, and this is going to be my swing low. We're waiting price to retrace back to the 62% area. So that's the area that we're concentrating on. I'm just going to take this out. So that's our sell opportunity in the market. As we can see, price hitting that. Price just moving into that. And you can see price drawing down again. Okay, of not drawing down, but moving down. So that is 2 entries. Again, 1 hour time frame that you could have taken. And now we can see price moving up and is basically ending the week on this area. So this is again the area that we're looking at, that swing high to that swing low, and we can see price moving into this 62% area. So let's move on to our next currency pair, which is going to be the British pound, US dollar. Okay guys, British pound, US dollar. This is the 4-hour time frame. This was the beginning of last week. Okay, so what we see is in the market, we see this fair value gap that was created in the market. You see that from this candle to that candle. You see a nice retracement of that fair value gap, and that is where you place your sell opportunities in the market. So that was last week that happened basically. Okay, so I'm just gonna take this out. So a nice little sell opportunity because price basically hit that halfway mark. Okay, so now this week started off very similar. That's the reason I take these two pairs and I do analysis on these two pairs together, because they've got correlation. They move in similar fashion. All right, so I'm just going to show you this area. So that was our previous high in the market. You see price moving up again, retracing, just hitting that area in the market, just going above that high in the market, just taking out some little bit of a liquidity that might be lying there, and then we see price shooting down again. Okay, it just took out some stop losses, building up some liquidity, building up some momentum, and then we see movement. So that is going to be my high then in the market, and that is going to be my swing low. So this is the swing high, swing low Fibonacci retracement back to the 62%. This is not rocket science, guys. This happens every single time. It happens on multiple time frames, just not just on the daily, not just on the hourly, 4 hourly. You can roll down even to the 1 minute time frame, guys. This is how I trade. This is what happens. And as you can see, price moving down, nice little area, and that's already 100 plus pips that price moved downwards. So then price swing again, swang again. So again, you can highlight these areas in the market, okay, these liquidity areas in the markets, but we can see price now again just moving up. And I'm just gonna take this out. Whoops, I'm just gonna take that out, this out, and we can see another similar to Euro USD, similar fashion. Price made a swing high, swing low, retrace back to the 62% area. Okay, sell opportunity, guys, but we want to see price carry on with the movement downwards. Okay, so just go to the lower time frames, just check where price might be shifting upwards again. Right, there's always that possibility that price is going to draw down. So if you're on the sell position, just keep an eye out on that trade, and just to see if there's any market shifts in the or shifts in the market, the price might just start moving upwards. But there's a big possibility that this downward trend might carry on. Let's move over to the 1 hour time frame. Okay, guys, 1 hour time frame. Price, this is the area in the market that price ended on last week. So that is going to be my swing low once again. Price is not my swing low. Price moving up. As you can remember, this is the area in the market that we highlighted on the 4 hour time frame. So price just, going, and it wants to just basically, it wants to go tap that, but you can see that movement downwards, movement upwards, and then tapping that area in the market. Okay, there's a nice little opportunity that you might have caught, and then price from there onwards just started moving down. Just gonna not spend a lot of time. We just saw that on our 4 hour time frame. I'm just gonna take this out, and what we want to do is we want to wait for any type of swing lows that forms in the market. And as we can see, this is the area in the market that swing low happened. So that swing high, swing low, right there, area that we're looking at is going to be this 62% area. This is the area we're focusing on for our sell opportunity in the market. And as we can see, price is hitting that area and then started consolidating a little bit and then started shooting downwards. Okay, so again, you don't have to be in a trade every single day, guys. If you are looking at these type of trades, I mean, that's 100 pips plus that you could have caught, and in 1 week. So yes, there is the saying that you must marry your currency pair, okay? But depending on your trading style, depending on how many pairs you want to trade, you can have 1, you can have 2. But I mean, I don't know what your target is for the week, how many pips you want to do in a week's time, okay? But here you can see, again, this is 2 currency pairs. 2 currency pairs that moves in correlation, that moves in similar fashion. You can trade both and you can make lots of pips just trading these 2 currencies, guys. And it's just having patience and waiting for that trade opportunities, the setups to happen. If you take this strategy of using if you're using the Fibonacci and you're using your fair value gap, these 2 will give you lots of pips in a week, but you have to just be patient. Don't just jump into any other trade. Be patient in your trading. Like I said, in this area where the price moves up, similar fashion to this one, we know the price is moving up to a certain point. This is taking out just the high that was there. This is price retracing back. Okay, this is a movement. Let's call it's a 70 pip move upwards. Go to your lower time frames, 5 minutes, do the 1 minute. You know, on a higher time frame, you've marked out this area. You have your swing high, you have your swing low. You know that price is going to go up. All right? You know that retracement is happening because that's the area you're marking out. You see the downwards movement. So that is an area that you're waiting for sell opportunities. Though, if you go to your lower time frame, you might catch a buy opportunity upwards, and that will be, and let's say you had your buy over here on a lower time frame. That exactly similar fashion that this market moves. You have a Fibonacci on a buy setup going upwards. This will be your target area. You highlight this area on all time frames, and this is your target. So you catch a 70 pip move upwards, and then you sell downwards again, because on the higher time frames, this is your sell opportunity that you're waiting for. So guys, go trade all time frames. Look at that currency pair. Look at all the time frames. Make sure you know the bigger picture, and then you will catch at least your pips, hopefully, that you are targeting for the week. So guys, that's all from my side. I hope you enjoyed this analysis. If you did, don't forget to hit that like button, hit the subscribe button, notification bell. Give me some love by hitting that super thanks button, and let's see what the market does this week. So guys, hope you've been having a wonderful week. Stay safe and happy trading, guys.